Hey everybody, Retire on Premiums. It is the morning of February 18th. It is Sunday, so obviously the stock market is not open. It's not open tomorrow either. Just wanted to do a quick video to just share how last week shook out for the CONY ETF versus coin wheel strategy experiment. We're almost halfway through month number 2. And again, this is not financial advice. I'm not a financial advisor. As you will see from this video, I am nowhere near a professional. So again, I'm doing this in my spare time during my day job, but having a little bit of fun. So let's get into it. So if everybody remembers, I carried over 100 shares that had been assigned to me in the first month in January at a cost basis of $135. Just to recap, in the first month of the experiment, I beat the CONY fund managers. I beat them both on the amount of distribution for a fixed amount of capital, which in month one was $14,900, and I beat them in total return because they had a very large unrealized loss. So when month one of the experiment started, the CONY price was in the mid 23s, and it closed the month, which was the day before ex-dividend date a week or so ago, at like 18. Well, you can see right here, 1837. So what do? I added 13,500 to this trade so I could sell another contract. Um, because of that, in theory, at on the 7th, I could have bought 734.9 additional shares of CONY. So that is added as the counterweight in this experiment. On Friday evening, the CONY price closed at 23.32 and the Coinbase price at 180.31. So if you remember from the beginning of this experiment, at the end of January, I actually closed out my positions on the last day or near the last day. I was able to buy to close a call that I had sold. As you can see, the stock at the end of the experiment, the Coinbase stock was well down below my cost basis, 117.11. So we roll into the February start of the experiment, month 2, which was again 27 was the ex-div date of CONY. And I sold a call. And that call that I sold was at my cost basis, which ended up being a big mistake. But the Coinbase price was 121.50. I sold that call again, a 135 strike, was 11% out of the money. I sold an expiration date that was what, 10 days in the future? So the 16th, which was just a couple days ago, had a delta of 0.27, and I collected $281.32. And what happened on Friday, the 16th, is those shares got called away. Um, Obviously, if I would have had any inkling of the radical, massive up move that Coinbase stock was going to have, I would not have sold a call at all. I would have just sat there, held the shares, and realized a very substantial profit, a very short-term profit of, oh man, 45 to $5,500, because even though the Coinbase price closed on Friday at 180, it actually hit an intraday high of around 190 on Friday. So in theory, I could have maybe timed it correctly. Last week or a week or so ago, I guess a week from Friday on the 9th, I also sold a put. The stock at the time had moved up to 139. So my call that I'd sold 2 days ago was already in the money, unfortunately. Um, and I sold a put at 125. That expired. So where are we to date? To date, I have collected $532.64 in premiums. I've not had to buy to close. I have 26.52 in accrued interest against the capital that deployed. And as you can see, and I went into this in earlier videos, I use a broker that allows me to keep my cash in a high yielding money market account and use it as collateral for my cash secured puts. Not every broker lets you do that. So where are we? I have a realized loss of 11 cents, and that is because the broker took about 11 cents out of this assignment. So when I got my capital returned to me Saturday morning, Friday night, late Friday night, Saturday morning, I got $13,499.89. And again, this was painful because those shares were worth at close $18,000. Where's CONY sitting? Well, CONY has a really large unrealized gain. So this is a combination of still a very slight loss based on 23.32. If we go back to February, the original CONY shares, if I would have started this experiment and bought CONY shares, would have been purchased at 23.46. So there's a very small loss on those shares. But because the CONY price has recovered from 18.37 to 23.32, almost $5, there's a pretty substantial realized gain. And so, I'm sorry, unrealized gain. So, as predicted earlier this month, I didn't think I'd be able to beat CONY this month. And that was because of, the stock being so far below my cost basis. And even if I would have sold a call here above my cost basis, like let's say I would have sold a 140 or 145 strike, that's probably the most I would have been able to sell it for and get any type of premium. I probably would have collected $100 and something versus the 281. So yeah, this is painful. This is really painful. So on Tuesday this week, kind of the plan is I'm going to sell a put. I don't think I'll be able to sell two based on the amount of capital I have, but I'll sell a put, and the goal would be to, collect some premium. I will say that on Tuesday I am going to be very patient and cautious. I may not even have a trade on Tuesday because that Coinbase stock just ran up so quickly. And that was really driven by two things. So as we know, last month, which really contributed to the decline in Coinbase was a little bit of this that happened right here, which was the, buy the rumor, sell the news around the Bitcoin spot ETFs being approved. I think they were actually approved on the 9th or so. Maybe it's the 10th. They were approved on the 10th by the SEC. We saw a pretty dramatic sell-off in Bitcoin. I believe it went down from 49 to 42,000, and then since has recovered and gained. It's actually above 50,000, or at least it was yesterday. So it's been hovering in that $50,000 to $52,000 range. And then also last Thursday night, which would have been the 15th, the Coinbase stock released very, very positive earnings, beat expectations. And so the Coinbase stock had already run up to about 160. Then from there, it moved up even more dramatically up into that 180, 190 range. So I'm going to have to sell some puts, at least one, and see what happens. But I'm going to be patient. Very likely that the Coinbase stock sells off a little bit. Might be some profit taking, and I can sell a put while the stock is down on Tuesday or Wednesday, which would really be my goal. So anyways, that's the update. Again, as you can see from looking at this, I'm going to get crushed this month by the CONY fund managers. I did watch the Retire on Dividends video Saturday morning, or the Thursday night, or Friday night or Saturday morning. I do believe they lost money on their weekly call, so they had to pay to close because they don't actually own the shares. Like I own the shares, so the shares got called away from me. They did not own the shares. I think they had a 140 call, if I remember him correctly, which they would have had to cash settle to close, but they made probably a significant amount on their synthetic position. So, kind of when you're really doing the wheel strategy, I mean, I could have done the same thing. I could have paid to close, meaning buy that contract back on Friday and then sold the shares. or kept them actually, but it would have been a little bit of a wash. And I didn't want to do that. So anyways, again, hope everybody is learning something from this, that this is just so darn hard to do on a stock that is as volatile as Coinbase. I think this is a great example, although a massively exaggerated example of what I tell people a lot about the wheel strategy. It's not that I didn't make money. I made money. I did not lose money. Now, last month, I had an unrealized loss. If you go back and remember, I had an unrealized loss because the stock closed the month around this like 117, 120 or whatever. And my cost basis of the shares was this 135. But I did not lose money because I did not sell. I held the shares, but I lost the potential for lots of profit because I sold away the upside with this call right here. So did I learn something? Yes. I learned a lot because, in my experience and, several years of selling these cash secured puts and covered calls, I have never, ever, ever done it on anything remotely as volatile as Coinbase, and just this massive, up and down reversal just happened so quickly, right? We went from 160 down to 116, back up to 190 in, 2.5, 3 weeks, which is a pretty dramatic move for a stock. It just makes it very, very difficult to sell options and pick your strikes. But look, everybody, that's what drives these premiums, right? That's what drives the high premiums and what allows, doing the wheel strategy to earn a couple percent per month on your capital, or, buying a stock, an ETF like CONY, and get paid 4 or 5 or 6% a month on your capital. But the real risk is that underlying price of either the ETF or the shares can leave you underwater every once in a while. So if you hear that gurgling in the background, I don't know if you can, it's my coffee maker making coffee. So anyways, again, thanks a lot. Appreciate any comments or questions. Feel free. If anybody's got some ideas on what I should do next week, please let me know. But yeah, I'm going to do my best to try to catch up to the CONY fund managers. Have a great day. Talk to you later.